Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, switching to my radio voice, seeing if I get a laugh out of either guest today. Thank you. Very much
You're welcome.
And today I have with me, I'm pitching the second game in a double header. So I recorded another podcast episode the last hour. Always hard when I do two in a row. But I think it's going to be a fun one. So today I have with me Josh Butler, the founder and CEO at CompScience, and Jacob Geyer, the chief insurance officer at CompScience. So both of you, thank you for joining me today. How's it going?
That's great to be here.
Awesome.
Great.
Awesome. And Josh, normally you're in San Francisco, right? But you're in the East Coast right now?
Yeah, that's right. Usually in the SF Bay Area, and right now up in Maine, seeing some family.
Maine. So when you go east, you go really far northeast,
down east, if you will.
Yeah, and Jacob is in Orlando. We are recording on August 30th. I'm assuming that Maine is gorgeous for about the last 2 weeks and the next week, and then it's the dead of winter, right? And I'm assuming that Orlando is an oven right now, basically.
Hot and humid. A wet oven.
I'm a big Disney fan. I've done Disney World about 11 times in my life. And the last one was last year for CPCU Into Risk. And 1 year during college. So I am 16 years older than my only sister. So it's hard for us to connect on anything, right? But we're both Disney fans because my mom's a Disney fan. So she raised us both to be Disney fans. So early in college, I think after my freshman year, my mom took us on a trip to Disney World. It was her first. Lucy was, I don't know, 5. And I was 16. I was 21 or so. She was 4. I was 20 kind of thing. And of course, it was just before my third semester of college started, so like August 17th through 25th, something like that. Holy crap, it was hot in Orlando. And we would go to the park all day, and I'm ADD. My sister is super mega ADHD, and she was 4. So basically we would get her the little push carts for the kids, the little the Disney branded like card, and she wouldn't use it. She was just kind of running in front of us, and while we're pushing the cart for no reason at all. And we would do the extra magic hours and all that stuff, and then we'd get to the hotel at the end of the day, and my mom and I would collapse right after the whole day running around really hot Orlando after this 4-year-old. And she would still be like super hyperactive, jumping from bed to bed. So I think that trip might be the reason that I chose not to have kids. Anyway, thank you both for joining me today. So we always give the guest the chance to do the elevator pitch for the company. What is CompScience?
Sure. So CompScience, we're on a mission to prevent workplace accidents. Before we started this, personally, I was working in the self-driving car industry, building out perception technology, basically using computer vision to understand what's going on around the car. And I was actually personally affected when my father-in-law had a workplace accident, and today he's on permanent disability, doing well, but on permanent disability. And he, his accident really had an impact on me. It really got me interested in, what can we do to prevent accidents like that? And so 3 years ago, I started CompScience, and we're using a lot of the same technologies that I learned how to build back there in the self-driving car industry, working for NIO. And we built an analytics platform that helps guys like Jacob understand the likelihood of an accident inside especially an industrial space, but also like logistics and
So
some manufacturing and stuff like that. And what we do is we package that technology into workers' comp. We price it better. Yeah.
Hold on. So your father-in-law. I'm very sorry to hear that. Did he work in a really high risk field?
He was in construction.
So fairly high risk. Okay.
He drove trucks, and he had a crane,
Okay.
and it was actually it was an accident that he had somewhat predicted and had actually spoken out about. And one day, as he said would probably happen, the crane ended up getting unbalanced and flipped over. And luckily he wasn't more injured, but his knees haven't been the same since he got ejected from it. And it just goes to show, like, a lot of times the risks in these environments are actually understood. People know them, and they're not doing things unsafe because they want to. They just don't have the voice or the data, and maybe the management. It's not that they didn't want to fix it; they probably didn't know how likely it was to happen. So that's what we're about: is really creating the data to back what people already know is an issue in many cases.
I started my career, so I'm as white collar as they come. Basically, I have never worked a day of my life with my hands, other than my Mac keyboard kind of thing, right? I son of a doctor and an engineer, third generation entrepreneur or fourth generation entrepreneur. Like I'm really far removed from the blue collar work. But I went to a state school where I did connect with a lot of people that came from blue collar backgrounds, first person in their family to go to college kind of thing. Lots of great salt of the earth people. And then I graduated college, and I took a job as I was an international student, so I needed to be sponsored for a work visa, and I was not an engineer, and it's almost impossible to get sponsored if you're not an engineer. And I ended up at a transportation company, at the largest flatbed transportation company, largest privately owned flatbed transportation company as a fleet manager. I knew nothing about trucking before my first day in the job, and the first thing they did is they put me in orientation with the drivers. So the drivers already had their CDL. They do orientation, and then they go off and train with a trainer on the road, right? So I got to do orientation with them. I didn't get to go on the road, at least not that time. It's a very risky job, and especially flatbed, because they load like the crane will load the load, but then you have to secure it and you have to tarp it most of the time. So I was a kid. I was 24 when I started this job, 27, almost 28 when I think 27 when I got downsized in 2009. But the reason I bring up the story is I became really good friends with a lot of my drivers, and how that happened is the company would, well, number one, we would get a bonus every month. I think it was like $500 if you went the whole month without losing a driver, without a driver quitting. Because turnover in the industry was like 124% when I got hired. They had to explain that to me. I'm like, what do you mean 124%? And they're like, it takes 1.24 guys to keep the truck moving all year, right? Like the average guy lasts less than a year. So wow, okay. So I was based in Des Moines, Iowa. Like it's right on 80. Trucks go by all the time. So anyway, the guys would come by all the time, and the rule was if you take them out to eat, the company pays for the meal for both you and the driver, and you can become friends with them. But like I've quickly learned that was a great way to keep them from quitting, right? And to get my bonus month after month. So I was really good at that. So and there was a steakhouse close to like a Texas Roadhouse kind of thing, not a fancy steakhouse, but still delicious. So I got a lot of free steak during that time. But anyway, so I made friends with a lot of my drivers. Some of them remain friends to this day. It was, I don't remember the time of the year. I think fall. One of my drivers, Brad Rodman, who I've met several times, who I liked, who was a friend, young guy also. He was probably 27, 28 at the time. And he, I had the choice of which loads he would have that day. Like I got some options and I chose. I didn't call him. I chose the load. and
Yeah.
he went to pick up the load at I think it was Griffin Pipe in Omaha, Nebraska. I can't remember exactly. Anyway, he picked up the load and he went on his way, and then he delivered the load wherever. I can't remember exactly where he delivered. I was trying to get him home to Michigan for the weekend because that's what we promised him. And while the truck is getting unloaded, he was working on the side box, like putting the tarp away or something. I really don't know what he was doing. He wasn't supposed to be doing that, right? Like that was a safety violation for him to be doing that. He's supposed to be away from the truck while it's getting unloaded. Anyway, there was an accident, and a crane hit this giant steel pipe, and it rolled over and killed him. So yeah, this I kind of want to say this is taking me years of therapy. It hasn't, because I'm a really easygoing guy, but I do think about him all the time and about his family. And I actually don't know where. Like I've actually Googled to see if I can find the court case, see where the work comp claim ended up. I have no idea. I hope that his family is okay. But anyway, like whatever we can do in industrial safety is very close to my heart. I agree completely. So anyway, sorry for taking that big detour.
No, I mean, thank you for sharing that. I mean, I know that, Jacob also feels very strongly about like why he's doing what he does. I think we often lose the story, the personal story behind every
mission
decision we're making here.
Yeah, and I think kind of to go along with Josh's story, I don't necessarily have a personal story, but when I was first introduced to Josh and the team at CompScience, the thing that went through my head was, how could I not be on board with this? Like, this is truly engaging with the policyholder at a completely different level. Talking with the client and giving those directions to make them safer with information that nobody else has. So, it's been really pretty awesome to find out more about the technology, how we were taking it to the market, how we're wrapping it into an insurance policy, and fulfilling our mission as an organization.
So how does it work? So how does the data get into the system, and then how, like, are the guys wearing, and when I say guys, statistically industrial workers are largely male. Are the guys and the girls wearing sensors, or how does the data get into the system? Let's start there.
Well, I can. What I'll do is I'll speak to the sort of technical part, and then I'll let Jacob sort of take it from there. How about that? So we've made it as simple as possible. There's like no hardware to install. We don't make cameras. We don't install cameras. Nothing like that. And there's no wearables. You don't have to people don't have to put on gear and stuff. The vast majority of our clients in this sort of four walls risk kind of space where we're starting have installed video cameras in their spaces already. And in fact, those have gotten super cheap over the last 10 years. Now you can install a video camera for a few $100. It used to be thousands of dollars. So all of that data is already being collected and stored either in the cloud or in some sort of on-site repository. We get them to send us a couple hundred hours of video, and we process it in the cloud using our computer vision. And then there is a manual element of interpreting the scores that we generate, and then creating a sort of a plan with recommendations for how to mitigate the risks that we're observing in that space. So that then gets presented to them in a risk report and in our app, so they can dig in and see really understand what is it that's going on that we're detecting, and they can build conversations around that, use it for toolbox talks and internal reporting. And then it also goes to Jacob, who's here to help create the financial alignment and incentives on the underwriting side. So I don't know if you want to speak to it at all.
Sure. So I would say, beyond what Josh explained, I think one of the things that's really neat about the product is, much like Josh's personal example, a lot of these safety managers or CFOs or workers that are in these facilities know what the risks are. What we are doing is we're providing an objective measure of how many times that risk is happening. And usually it's happening a lot more than they think. or they think, hey, we did the safety video, so nobody is doing that unsafe act anymore. Well, we've got video, and it actually happened, 427 times in a 100-hour period. A video that we reviewed, and that provides for some eye-opening conversations with the client on, okay, I have this issue, and then we can help them with recommendations. Oftentimes are inexpensive to fix. We always, have an eye towards providing the most value with the least amount of cost, which again kind of gets back to the no hardware requirement. Yeah. But then tying this in with the insurance product, we're really adding our technology to an insurance product that already exists, which is workers' comp. So we are not a carrier. What we are acting as is an intermediary with independent agents to add our technology on top of the policies that already exist. So it's really a juiced up version of workers' comp, where we're delivering this value to a buy that is mandatory for the great majority of businesses in America.
Yeah. Yeah. I think a lot of what sort of makes it so that we can offer attractive prices is that, we're helping the safety team focus not on sort of like standard 4,000 point checklist from OSHA, but focusing on the things that are actually going to do the most to reduce the accidents that are happening in the facility. And most of our customers are mid-size or larger, and they have, there's a list, it's often a few dozen accidents that are happening every year. So but there's not usually enough to really draw out a pattern necessarily without understanding the objective metrics around the kinds of overuse injuries that are likely to happen, that you can really only understand once you see sort of what are the common activities and the repetitive motions and a lot of those ergonomics related losses that frankly are driving the most common and often the most expensive kinds of injuries.
So I think just to add on to that, when you think through the traditional areas of an insurance organization, the two areas that really stand out with what our product can help with is loss control and underwriting. So if you think about a traditional loss control pre-inspection, the loss control professional goes out, the entire organization knows because the safety manager is probably calling out, hey, Josh from CompScience is coming out today. Everybody make sure your shoes are tied. You've got your belt on, and you're bending with your knees, you're doing this and that. So then the loss control professional shows up, everybody's on their best behavior, and then everybody goes back to their bad habits, but they've got their insurance policy and they're able to get a good rate.
Yeah,
we kind of blow that away. They can't do that with a camera, because this is really getting at the true exposure and the true understanding of the risk of the policy. And then from an underwriting perspective, we're giving an unfair advantage to the carriers that we're working with, because of the fact we really, when you're an underwriter, what do you have? You have experience mod worksheet, you've got an accord form, you have an understanding of heavier light and exposure, you have prior claims information, but you don't really have what are the things that are happening that don't show up on a claim report. And that's where we're able to dive a lot deeper as an organization and give exponentially more data, because we can show here's exactly what's going on, and here's where that next claim is probably going to come from. Is they're doing a whole lot of overhead grabs of these boxes, and it's only a matter of time until somebody blows out their shoulder or their back or what have you.
Yeah, there's also all those examples of companies that have just had unlucky breaks over the last year or two, where they actually have a very safe operation, but they've had some large claims and they're getting penalized. The premiums have gone up, and frankly, it's a good risk to take on. So the way I think about this a lot is we're actually realigning incentives where they should be. We're rewarding the ones that are actually safe, and frankly, and crediting the safety investments they're making. So I think that's a really big part of how we've solved the problem.
Okay, so if I've understood correctly, your main point of engaging is with the agents. So really, the brokers that do a lot of industrial type risk construction, that kind of thing. Okay, what kind of brokerages are the best partners for you guys? So I'm assuming commercial lines focused, and they have to be a certain size so that they're doing a significant amount of manufacturing and that type of risk. So what type of brokerages are you looking forward to get a call from?
Sure. You want to take that one, Jacob, or you want me to?
Yeah, I can take that.
All right,
So
cool.
I would say, size isn't necessarily the biggest determining factor in terms of what makes a great agency partner. Now, that being said, larger brokerages are going to be able to get at more business. They probably have more specializations. They may have experts in these certain verticals. But we are really looking for people that are going to be evangelists for the product that we're putting out. And frankly, agents that want to have an extremely unfair advantage in delivering something to their policyholder that few other people have access to. So we are looking for depth. We're not looking to be with every single agency across the country. We don't want to have that type of dilution of our product. Really, we're looking for the people that will be able to explain and jump on board with what we're doing and really work and deliver the value proposition to the clients.
Yeah, and that also makes it really valuable to those brokers, right? The better the product is, the more that they can use your product as a differentiator for the clients, for their clients. So this is a good
right.
fit.
I mean, the way we see it is, we do support them, the brokers we work with, quite a bit. We do webinars with them. We provide them with materials and train them up on the product and everything so that they can really evangelize this, because we want them to have an unfair advantage out there, and we're here to basically help them take the niche that we're really, really good at understanding and fixing, and that's the manufacturing and the logistics and wholesale trade, retail, the companies that are we don't target the ones that are on the smallest end of the spectrum. On purpose, we're targeting like mid-size and larger type companies, ones that, and especially we found the mid-size ones, they tend to have sort of a part-time safety function inside the company, and that whoever's responsible for that, whether it's ops or whether it's it can be HR, they're often they're doing the very best they can with very limited resources. So our product can actually be like super valuable for them, because they know they're not keeping up with they can't be everywhere at once. They don't have a full staff of safety managers. So they're doing their best, but they really can use tools like ours to be more effective.
Okay. What about the carriers? So how do the carriers play into it? How do you partner with the carriers? I see on your website that you do have our workers' comp product includes not only the most advanced safety technology, it is backed by A-rated paper. But you don't tell me who the carrier is.
Well, we have more than one we work with.
Okay.
So we do work with AmTrust. We also work with CompWest, and we've also got a deal with the Hartford, and expect more to come. But that's who we're working with today.
I just found it interesting because most insurtechs, the first thing you see is the logos of the carriers they're partnered with, and in some cases, like it might be a really crappy contract. The only reason they signed that I've had them tell me this like offline. Yeah, that particular one's a really crappy contract. We just needed their logo on the website. So it's just interesting.
We love our partners.
Some good carriers, and you don't have the logos on the website. That's why I was.
I'll tell you this: we love them, and I'll tell you this: they often they do generally give attractive pricing because they know how effective our technology is, and on top of that, they're giving the best claims service too. We get the best claims team they have. We have a dedicated claims team with each carrier partner. It's not like your kind of traditional like wholesaler relationship that you often see out there.
So carriers that are listening, that do a lot of business in this type of line of business, that would like a partnership with a company like you guys, also reach out through Jacob. Is that the way?
Absolutely.
Oh, thank you. Yeah.
Awesome. So normally the other couple of things that I like to ask is how is it priced? Who's paying for the service? Is it the broker? Is it ultimately the client? Is it the carrier? Who's paying for the service? What's the revenue model?
Yeah, so really the revenue model is our services are tied directly in with the insurance policy. So the client is not paying anything additional to be working with us. It's all baked into the premium, and then we do the standard commission model. So the revenue is really tied to commission, and we aren't charging anything additional on top of that to the policyholder.
The only exception to that is if like mid policy period or if it's a self-insured, like we do have SaaS contracts that they can purchase. But like you said, like if they buy the workers' comp through us, there's no additional cost.
Okay. Any great client success stories? Like what's kind of your go-to, Jacob, when you're calling on a potential client, broker, carrier, or whoever that you want to partner with?
Yeah, I've got one that I usually like to throw out, and it's a little bit of an interesting one. So we have a client that had this long conveyor belt, and what we noticed as we went through our footage was rather than people walking around to the end of the conveyor belt to grab boxes on the other side, people were jumping over the conveyor belt. And you can only imagine, if you've been in comp long enough, all of the things that could happen. Somebody could, trip over that conveyor belt and smack their head on the concrete on the other side. They could get their ankle trapped and have a broken ankle. There's all sorts of bad things that could happen. Yeah. It really is a very, very risky thing to do. But in the name of efficiency, that person has so many things that they need to get done. They're gonna, the path of least resistance is to jump over that conveyor belt rather than walking around.
Quick assumption that moving the conveyor belt so that it is no longer to create a better path would be a very expensive process, I'm guessing.
Very expensive. Yeah. Yes, it'd be extremely expensive. So this is something we noticed. We took it to the safety manager. The safety manager knew, okay, I know people are doing that a little bit. And we said, did you know that they did it 580 times in this 2-week testing period that we were looking at? And that's when the jaw hits the floor. Okay, we're going to train them. We're going to train people, don't jump over the conveyor belt. We ran another 2-week look, and it dropped in half, which is great. They went from 580 down to 280 times the people jumping over that. And we thought, we can do a lot better than this. So in working with the client, rather than moving the entire conveyor belt, what they installed was a lift gate. So when somebody needed to go from one side to the other, the conveyor belt would stop, they'd open the lift gate, walk to the other side, and go back, lower it back down, and then continue work. That 280 times dropped down to 3. So there was still somebody that was trying upper hurdles or something and decided to jump over it. But very quickly, in a very short period of time, we were able to go from something happening almost 600 times in a 2-week span to 3 times. And there's there are a dozen examples of this, but that's one of my favorites.
Do you happen to know how much the lift gate cost?
I don't. I can't imagine it was very expensive.
Okay, so the lift gate, probably a single prevented injury was probably more than enough to pay for the lift gate, and without counting the human cost, right? Just like
right.
the ROI of the lift gate, like probably paid for itself in one prevented injury.
Absolutely. The average lost time injury costs in total about $44K per injury. So it doesn't take more than one of those to pay for something like this. But I think it also like doesn't really take into account honestly just the living in like constant like pain of many of the kinds of injuries that we're talking about that we actually help prevent. Like a lot of these are a lot of the kinds of injuries we're talking about are like cumulative over like many years. Like there's another example that I know Jacob's familiar with of an employee who works in a window manufacturer, and he was like manually lifting up these big windows and moving them by hand, which is like a lot of strain on the body to do this. And when they saw how many times this was going on, they actually gave him a little dolly to use. And like the next day after he started using this, he was like, "Oh my God, now I actually." This is the story he told us was when he goes home now, he has the energy and he is not in so much pain that now he can actually play with his kids back at home. And it's like those stories that they don't show up in the data. They don't show up in the data about the the injuries and the claims that that we process, right? That OSHA sees and all of that. But it's like there's actually huge societal impact, huge personal impact on the employee, the kid. I mean, all of that. Yeah.
100%. And when we talk about chronic pain, like we would be remiss not to talk about the opiate epidemic.
Absolutely.
Right? Gigantic problem in this country, and a problem that didn't exist 20 years ago. And it is taking a huge number of men, mostly men, off of the workforce, which is bad for the economy. It's bad for their families. It's bad for them. It's killing a huge number of them. It's getting them into illegal opiates once they can't get any more prescriptions. Like it is a ginormous problem for society. Like beyond ginormous problem for society. Anything we can do to improve that is a big win. So yeah, hugely important work. Absolutely. I'm always curious on the origin story. You did talk about your father-in-law, so clearly like I can see like very simply how you got the idea. So let's think a little bit before that. What I'm a little when you first introduced yourself, Josh, you talked about how you came from the autonomous vehicle space, and I find it kind of fascinating that we've already been doing autonomous vehicle technology for long enough that there are alumni of that space that are now innovating other spaces. So I'd love to hear a little bit about how like what you did back in autonomous vehicles, and then how that directly once your father-in-law was injured, how you made that connection. Like how did you know insurance was important in this play?
I mean, I think there were two things that attracted me to the self-driving car space in the beginning. One was that it's like the best funded R&D project ever, basically. You have tens of billions of dollars that have been put against this problem because it's a massive societal problem. The number of like on the road accidents that kill people every year. I mean, tens of thousands a year in the United States alone. Let's not even talk about developing countries. So if we can solve that, we're saving like millions of lives a year. Two, there's the just the way we live and the time we waste sitting in traffic. Like, we can fix that, right? So that was certainly very interesting. I guess those are the things that kind of got me excited about that, working on that problem, and that's really where I learned. I was putting to use, I guess, my AI background in a way that felt really meaningful. As a part of that work, I was on the product side, building out the data platform that was responsible for validating how safe this robot is that you're putting people inside of and then like sending down the road. And my job was to figure out, okay, how do we make sure that this thing is actually safer than a human driver? And how do we convince the people that matter that that's the case? And part of that's convincing regulators, and part of that's convincing insurance companies who we were already working with, even like just honestly initially for the test fleet, but eventually we were working on getting permission, well, to have a driverless car on the streets. Frankly, you know, it's a problem that's always 3 years out. I think everyone thinks that's about 3 years away from having like fully self-driving cars on the road, and it just feels like it doesn't get closer. And I was a little tired of working on a product that frankly wasn't yet in the market. I'm a big believer in getting the technology into the market immediately and iterating quickly. That's the kind of product manager I like.
This is really interesting because the media is always making us think that magic technology is 2 to 3 years away. But a research paper comes out, and the media, the Wired makes it, well, maybe not Wired, but like the media makes it sound like I'm going to be able to buy the product 2 years from now, right? And we're nowhere near. And then there are some that are a lot hard to predict, right? There are some that require the technology hitting exponential growth before it can really be useful. Things like general AI. And self-driving cars are a good example where they so you and I have a little bit of a parallel background. I started school 2 years after you did, not at Brown, at Iowa State, but in computer science. Well, it turns out if you're bad at math, you'll never graduate from computer science. So I ended up graduating from a degree in management information systems, mostly business. But what I wanted to do in computer science was AI. I wanted to apply AI to education, not to self-driving cars. But I do remember in like Comp 101 class, when I was a CompSci major for that 1 or 2 semesters, I do remember how driving in 2002, self-driving was described as one of those things that computers would never be able to do. Right. And then like, the DARPA challenges were happening, and that was all exciting stuff. And
cars were still flipping over in those challenges. They were like, they were like run into a lift gate, just like not even see it, just run right into it and stop.
But then eventually, we do have some level of self-driving, right? It's not perfect yet, right? Your Teslas do have the autopilot feature, and people are not supposed to use it as self-driving, but sometimes they do, and every once in a while somebody dies because they're using it when they're not supposed to be using it, watching a Harry Potter movie while they're supposed to be keeping an eye on the road, kind of thing. Anyway, So I'm going a very long way around to say like yes, the media always makes us think that it's 3 years away, but I always assumed that you guys actually working on it had a much better view, and just the media wasn't listening, and you were telling them no, we're 10 years away, but then on the other hand, right, the company CEO, if it's still venture backed kind of thing, kind of has to tell the investors that it's right around the corner, because otherwise they'll never get investment. So I do get that. So anyway, I always assumed that the engineers working in that space did have a better view, and they weren't playing the it's 3 years from now thing every year.
Yeah, there's a lot to unpack there. There's do the engineers think it's ready? And some of them do. Like Elon, maybe.
I think he's largely a hype man, but yeah, whatever.
That too. But I mean, I do drive a Model 3, and I use autopilot all the time. In fact, it made my life tolerable commuting to San Jose every day for a year.
When you're using it, are you watching Harry Potter, or are you paying attention to the road just in case?
You have to pay attention to the road with autopilot. They make that clear.
You're supposed to, for sure.
Not everybody does. Some people fall asleep, but they usually don't have an accident if they fall asleep, which is a big improvement. But other than that, but like all that aside, automatic emergency braking, lane keep assist, all these things. These are features that do require perception of the road, and are safety features, just like autopilot, that are making huge differences.
Yes.
Already.
100%. So yeah, we don't have full self-driving cars yet, right? Like BMW or Mini or whoever, or Toyota, whoever, they won't yet sell me a car without a steering wheel that I can just, sit in my little pod and watch a movie while it takes me to wherever I need to go. Right.
Yeah, it's a problem that we're, and this is a big distinction between a self-driving car and what we've built. A self-driving car is safety critical. If the system ever fails, someone's likely to get hurt.
Yes.
Right. Someone's really likely to get hurt, potentially killed. Whereas our system, it's not safety critical. It doesn't need to be fail operational. We're gathering data using a lot of the same CV technology to understand this space better and inform better decisions. So instead of AI, they call it intelligence augmentation. It's not artificial intelligence; it's intelligence augmentation. We're creating tools for guys like Jacob and our head of loss control, Chris, to do their jobs better.
Yeah, I have one more question about your past, just because it's really interesting. I just noticed that you spent a year back in 2008 at Intertech, and it's listed. You have it listed as the top U.S. Costa Rican IT consulting firm, serving various.
They are probably.
I'm curious how you ended up with that. I happen to be from Costa Rica, so that's
you
why
are
I'm
not.
Yeah, born and raised. Yeah.
Where were you born in Costa Rica?
San Jose. Sabanilla.
San Jose.
Yeah.
In Sabanilla, I lived in Sabanilla for a while. I did. I lived a lot of places in Costa Rica. I was there for 5 years.
But you're not from Costa Rica. You were there for 5 years.
I moved there after college. I started my first company there, and we did technical and English training. It was a corporate training center. You mentioned you were interested in education. I think we need to connect again after this. And we were able to. I created a curriculum, a product that basically could help people double their salaries in about 4 to 8 weeks of training.
By helping them perfect their English, or by
they improve their English and some technical skills, and they could get jobs in some of the multinational, international companies down there.
So for the listeners, I
one of them was Intertech.
Yeah, the listeners, I rarely talk about Costa Rica because I have a love-hate relationship with Costa Rica. I grew up down there. My family's still there. It's a beautiful place. Not San Jose, but the beach and the mountain are beautiful places. Yeah. It's a very highly educated country, but it's a really weird country in that speaking English well pays better than most college degrees. And that creates a really weird economy, right?
Yeah, if you get both, then you're golden.
You've got both, exactly, and you're golden, exactly. We definitely have to connect offline. Not only about that, I have an education idea that we've submitted to an InsurTech accelerator once, and it got very close to getting in, but it didn't get in, and I'd love to run it by you. Anyway, way over time.
Intertech acquired my company in Riga.
Yeah, I definitely want to hear that story offline. Accept my LinkedIn invite. I sent it at the beginning of the recording. And Jacob, I see that you're a fellow CPCU. When did you get your CPCU?
It would have been 2014.
Did you go to Anaheim or did you go to Indianapolis?
I was invited to Anaheim, but I did not attend.
So you have not been to an annual meeting?
I haven't.
Okay. So let me tell you what you missed. You did all of the work and you got 40% of the benefit, and you're missing the 60% of the benefit from joining the family. Not only that, here's what you really miss. I do recommend that at some point you do go to the annual meeting. This year it's in San Francisco. Make a company trip to with Josh, and then stay a couple extra days and do InterRisk. We haven't done San Francisco in a long time, and it's a great conference city, so it'd be a great city to do it. Next year it's in Washington DC. So anyway, do San Francisco this year. I'll be there. I'll be wearing my top hat and my red jacket. Look me up. But here's what you lost, what you missed out in 2014. In Anaheim 2014, a young, doe-eyed, fairly new CPCU, 3 years as a CPCU, started his public speaking career at Anaheim 2014, speaking about millennials and insurance. A session that was at the same time as another session that was a game show that was giving away money, and somehow the millennial session attracted like 400 people. They had to bring in extra chairs, and then this crazy dude is wearing a Superman shirt underneath his suit, and 10 seconds before the start of the presentation decides to take off the button down and keep the Superman shirt, and basically goes viral because the presentation was really good and the Superman shirt. And so that was me. That's when I started my that's where I started my public speaking career, and since then I've given my presentation in like 60 different conferences. It was a career maker for me that day.
Really?
I ended up writing the book about millennials and insurance. My author photo in that book is my classic Superman thing. I don't do the Superman thing anymore. I mostly do the red jacket and the top hat. But anyway, you could have been there.
I'm sorry to have missed that.
So anyway,
all these years later, we get to meet virtually.
Exactly. Hopefully, I'll see you at Interisk San Francisco. Josh, you live in San Francisco. Maybe we can get you in as a speaker. I'm not one of the organizers, but it would definitely make sense to check out Interisk.
I'm invited. I don't have my underwriting. I don't have my credential. You're sure
it's
invited?
Fine. We'll sell anybody a ticket.
Honorary.
We have many speakers who are not. So Lamparelli, Nick Lamparelli, who ran this podcast for several years, and then went on to create Rethought Insurance, and he's revolutionizing flood insurance in the private sector. He's not a CPCU. We've been trying to get him to the meeting for years. Finally, last year he spoke at CPCU Orlando. Great experience, I think. Anyway, I've got to run because I'm running late to a concert now. A real pleasure to chat with you both. This was super interesting. I thank you for the work that you're doing. I look forward to see CompScience continue to revolutionize the space of industrial safety. Again, thank you for the work you're doing.
Thank you so much for having us.
My pleasure.
Really,
absolutely. Thank you, Tony.
You're an excellent interviewer. Thanks so much.
Thank you. I've done a few hundred of them, and I'm passionate about the topic. Right. Sometimes I get, so I almost always reach out to the business side co-founder, but sometimes I end up with the tech co-founder, and some of them are really good. Some of them are not. And I'm not tech enough. So there are times where the tech co-founder I have to like spoon feed it out of him exactly what they do. Those are the worst. There's some episodes that never saw.
I'm sorry if that's how this went. I apologize.
This one was really, really good. When it goes live, I will tag you both on LinkedIn. I will tag the company on LinkedIn. Thank you so much for coming today.
Thanks, Tony.
Absolutely. Thanks.